This video is called Politics versus Insurance Companies. My name's Jacob, and I'm a life actuary. And every single time I talk to people and mention that I'm a life actuary, usually I get a little tilt in their head and they ask what an actuary is. And sometimes I even have gotten responses such as how evil insurance companies are. And, they get a lot of flack, honestly. They And, with one thing here on this next slide, I have here the view of insurance in politics. And here in the top left, I have a little article here on finance.yahoo.com, and it just talks about how huge insurance companies are. And to be fair, a lot of insurance companies, most of them, they make a lot of money. And there's a lot of there's a video I made on how insurance makes money, how insurance companies make money, and I definitely advise you to check that one out. I get a lot of flack from people talking about how evil insurance companies are because they didn't pay a benefit when they should have, or they're of the devil because they're investing in all these assets and just swindling and taking all this money from the people and taking money from innocent people. And again, I want to just rebuttal that. Check out my video of how insurance companies make money, where I defend a little bit about that. But especially, I'm going to defend that here too. But before I do that, I want to just talk about how in politics, how they reflect on how people feel about this. Here on the bottom left, I have first something from President Biden, and on his little campaign, how he wants to increase corporate tax. He wants to increase it 7%. If you look up here in this Fortune 500, the 74 companies of this 500, so that makes up 15% of the companies. Those are insurance companies. So he's going to raise taxes on because he targets so much on big companies, he's targeting a lot of insurance companies. And so that's going to tax a lot. Now, if you're a Republican, you may say, hey, you know what? Republicans are on the company's side, they're on business's side, and they're on insurance. They perhaps are on insurance company's side. Well, not so fast. You look up here on this top right corner, and this is the Tax Cuts and Jobs Act, and that's the one that President Trump he also he signed this one into law. And you may look at this and say, hey, he decreased taxes on a lot of companies. However, the Tax Cuts and Jobs Act specifically targeted life insurance companies, and they lessened the tax cut just on life insurance companies. Could you imagine that? So you can get a consensus on views of politics versus insurance companies. Now, if you're looking at the left again, you might say this bottom left one, it's like, oh, this is targeting big companies. It's not targeting insurance companies. Well, let me show you this next slide. I think we could pretty much agree that California is far left field as far as politics goes. And check out this headline right here. California insurance crisis. Insurers like State Farm leaving California. Now, but just to clarify, this is home insurance, and this is also for new policies. Anyone who's an existing policy holder, they can still keep their policy, and you still have auto insurance and life insurance there. But regardless, check this out. Allstate also joined in. Farmers also made similar moves on pulling out of California. People are pulling out of California, and you see here that it's like, risks associated with climate change are creating a home insurance crisis. You'll see things if you look on state farms, their statements, they'll give excuses that there's so many wildfires, or reinsurance, which reinsurance is a topic of itself. There's a crisis there, and it's difficult with California, or they'll just throw out a whole bunch of excuses. Honestly, that's not true. If you read between the lines, it's because of the regulations in California. People are pulling out because of Californian regulations against insurance. If you think about it logically, hurricanes cause a lot more home damage than wildfires possibly could. And so why would they not leave Florida or Georgia or Louisiana? They're still happy in providing insurance there. It truly is coming down with it's affecting every single life insurance company, every single line, not just home insurance. It's all lines of insurance. California is making a headache. And so much so that they're even pulling out. Now, if you're going to pull out insurance companies from people who need insurance, which I'm just going to advocate again and again, most people sometime in their life need life insurance. It's a need. It's not a want, it's a need. And if they're going to pull out, what's that going to leave? It's going to leave less people. And if you're going to have higher regulations, it's just going to increase the premiums. Let me defend a little bit more on the case of insurance. The competitive market, that is the main driver of keeping insurance premiums low. If you're going to cause regulations that are going to try to defend policyholders, such as, well, you should. Honestly, you need to defend a policyholder. But if you're going to increase taxes, for instance, that's going to increase premiums. Or if you're going to make so many regulations that makes it really difficult to sell insurance, or is it going to make it so favorable to the policyholder that the insurance company can't win and they can't make money, they can't make a profit, and of course they're going to pull out. Also, here's another thing about defending the case of life insurance. In my other video, how I said how life insurance companies make money, they're expected to make a profit, but they don't always make a profit. This is up to the insurance actuaries. They predict the probabilities of loss. The risk can never be projected perfectly. Let me give a couple of examples where it's gone wrong. When long-term care was initially when long-term care insurance was initially sold, it was super underpriced. And people bought all this long-term care, and insurance companies were starting to lose a ton of money. And that's a case where they lost money. And so they don't know. It's always something new. It's difficult for them to do that. And so they're not just swindling money. They're just trying to predict as best as they possibly can to have to minimize their risk and to stay afloat so they could protect the policyholders. Another example where the predictions gone wrong was credit default swaps. This was back during the Great Recession, where particularly AIG insurance, they associated credit default swaps has the same thing as life insurance or insurance in general. And it, of course, is not. It's associated with the market. And if you want to study that on your own, you can. But basically what happened is they sold all these credit default swaps. And when the markets all went down, AIG just lost so much profit they had to get bailed out by the government. By the way, I have no hard feelings against AIG. In fact, I'm actually insured with AIG, although I'm not going to be a proponent that you should buy it. But it's just something I chose to do. It fit me perfectly anyways. But here's the last thing. Any life insurance product has risk of being predicted incorrectly. I could probably state that any insurance company has some product out there that they're getting a loss on it. And they wish that everyone on it lapsed. So they wouldn't have to pay it, and they wish that they wouldn't sell it anymore or something like that because they're losing money on it. And so that's what's difficult about insurance. They're not swindling the people. They're trying to predict and trying to make it as competitive as possible. Another case for defending insurance is they're actually trying to invest the premiums, and then that makes premiums cheaper for the policyholders. So they're trying to get a lot of interest. So you're not just paying a whole bunch of premium. You're not paying $1 million of premiums to get $1 million in benefits. That's not what it is. You pay less in premiums, and then they invest it to get interest, and it lowers your premiums down. Another thing to vouch for insurance is there's actually substantial tax advantages on in insurance benefits. For instance, everything is taxed. Who has a gross that's equal to their net pay? There are some people, but 99.9% of people, that's not the case. And so, but if you were to receive a life insurance benefit of, let's say, $100,000, guess what? You don't write a single dime to the government. You get to keep all $100,000 of that. And just as I said before, and I'm not just going to be just against California. Again, there's issues with the right and the left on government intervention that's driving insurance companies out and making premiums higher for people. And really, this is too bad because life insurance is most needed to people who are of the lower and middle class. Although you get most people who buy insurance are probably in the upper middle class or the wealthier because they understand the need of it. But it's really too bad because honestly, if you're going to have too much government intervention, it increases premiums, and those who are poor who really need the insurance, they're kind of wanting to drive out, and it kind of incentivizes to not buy it, which is really a shame. Again, I hope you shared this video, you like it, and that this word can get out for an advocate of insurance.